So I guess welcome, Andrew Blueball, Mark Lubers. I think there's some other guys from Westbred that are on here right now. Thank you guys for coming or for logging on to the presentation here. My name is Andrew Hoelscher. I do the owner of Farm Strategy. We do work with wheat growers around kind of the Southern Plains region, developing some unique programs, getting them into mills and that type of stuff. And what we're going to discuss today is a program or a project that we're going to be running this coming spring, actually planting spring wheat out there. So a little bit about what's going to happen. I'm going to present, some of the market backdrop of why we're trying this. We're going to go into some of the pricing structures that are there with it as well, and those type of things. And then we will also roll over, and I will let Andrew Blueball with Westbred go over some of the variety selections that are out there. I would expect as we move forward, there's going to be a fair amount of questions with this. I would encourage you to bring those up. I would encourage you to challenge some stuff if you need to. And what we'll do from there is we'll continue to develop the program. We don't think that this is the last time we will communicate with everybody on this. So moving along, just a little bit more of an outline for you. We are going to address the risk. I mean, there's a reason that we're doing this as a pilot project. There is risk. We're going to discuss what the right fit farmers look like in this program. Then I'll go over a little bit of the demand and the size and why we're doing it, as well as then go into the pricing, what the expectations would be from put on the grower to actually help execute this. We'll go into some of the insurance pieces, FSA reporting pieces, and then obviously, we can grow this grain, but how do we actually get it to market? We're going to address that as well. And then I'll turn the presentation over to the Westbred guys, and they will go over some of the variety decisions that are out there. So moving on here, the risk side of this, we're not doing anything that hasn't been tried before. There's been spring wheat that's been tried. There is a desire, especially this year. There's a significantly bigger desire that's there. I will tell you that in the past couple of years, we have seen some pretty significant successes where we've grown spring wheat with good test weight and great mill and bake features. And then there's also been failures that have happened. So what we're trying to do with this is to figure out the risk, to figure out the market potential. And when we'll go over the market potential more, but I will tell you that there is a market available. And if we can satisfy that market, then we're going to be in good shape learning these things. So 3 things I want you to know with this risk side. Obviously, there's production risk. We're going into something that not a lot of people have tried. Once again, it's had successes, it's had failures, but there is risk. There's environmental risk, as with anything. We're specifically, we think the biggest environmental risk right now is going to be the grain fill. We're pushing this a little bit back. We're delaying it. We all know what heat does later on in the year to the wheat crop, the HRW crop. And so there's the environmental risk, and then there's the market and the financial risk of it. With this program, we'll not have RMA insurance backing it up. That will have some over-the-counter insurance products that are out there, but there's that financial risk that we have to address. So know as we go through this presentation, we are not wanting to sell a bill of goods. We're wanting to be fully transparent and saying, we want to see this happen. We want to make a good push for it, but there is risk. So with that risk being known, who's the right fit farmers for this? I love a Winston Churchill quote down at the bottom. It says, success consists of going from failure to failure without loss of enthusiasm. Not that we're expecting failure here, but as we just addressed the risk, there's issues with it. There just are. But what we're going to learn, what we're going to try to do, the markets we're going to try to develop, we think we can learn from these things and eventually develop a pretty successful program out of it. The first thing I have listed here on the right fit farmer is kindness. We are doing something and we are going out and we have a realistic idea in our mind that there could be some issues. It could be transportation issues. It could be, what do we do with a bunch of 54-pound wheat? Some of those things we've addressed, but if we're just functioning under kindness and actually willing to work with each other on this, then that's the first thing that's going to underpin this. If you have to win every argument, you have to win every negotiation, and the best bragging point that you got is that you can beat your fist on the table and say, I won, I don't know if you're a right fit. But if you're willing to work and you're willing to dialogue and you're willing to make this happen, then we hope to honor you in how we do this and function with kindness ourselves. Innovative obviously speaks for itself. We want somebody who's willing to go out, change their rotation maybe a little bit, see if this fits into their rotation, give it a try. On-farm storage or an access to some sort of storage is going to be important. Everybody knows how frustrating it is to try to get trucks a distance to a flour mill or whatever during harvest. If you don't have access to on-farm storage or the ability to get some sort of storage, then we need to talk about it and make sure we get that problem solved. Financial security, once again, your banker is probably not going to want to take leverage on this because we don't have the crop insurance piece on it. We will have insurance, but not your typical RMA-backed crop insurance. So not looking for somebody that this is a rescue for their farm, not looking for somebody that is going to bet the farm on this, but somebody that's willing to try with us. And then the last thing is an understanding of grain movement. So obviously this grain has to get to market. At the same time, trucks break down, elevator legs break down, whatever it is. Just a general understanding that the grain movement industry sometimes has many errors inside of it, and we are willing to work within that industry and be flexible in that. So that's who we're looking for. Over time, will there be some self-selection out of it or something? Very well could be out of a program like this. In general, though, we want you to understand kind of what's going to govern the way that we interact. And those, kindness, innovation, and financial security, that understanding of grain movement, those are going to just be core pieces of understanding that we need to have. The farm storage, we can figure out a solution, but especially kindness, guys. We got to have kindness for the program. So, understanding hard red spring. Wyatt, in general, where we see this fitting into the market right now is that hard red spring is used a lot for whole wheat flours, mainly because of its dough strength. It's used as well for blending stocks, both domestically and internationally, because of that dough strength. So if you remember the low protein years, low milling and baking quality years that we had, 16, 17, might even been 15, but in those years, we were seeing a significant amount of hard red spring coming down into the hard red winter wheat area, sometimes up to a 30% blend, just right inside of our back door. So if we can handle this domestically or geographically right to the flour mills we have located here in Kansas, Oklahoma, that area, then even Colorado, then we should be able to displace some of that blending stock if it's needed. Now, the other solution is to just grow a much higher quality hard red winter wheat and not have to deal with that. But anyway, we'll go into some of the logistics of it later. So whole wheat flour, blending stock, and then this high dough strength, pizza crust, bagel, artisan bread. Some of your more crafty type places are going to be using a little bit more dough strength. So in general, the reason that HRS is used and displaces HRW is because of the dough strength that's out there. The absorption rate on it, the ability to add water to it is also a lot better. But these are some of the markets that we're looking to get into is the whole wheat market, blending stocks, and even some of the artisan pieces. So traditionally, spring wheat is going to be grown across the northern border of the U.S. and up into Canada. Roughly 20% of all wheat is going to be hard red spring by classification. And in general, it's not grown here because we think it's too dry. We think it's too hot. Filling conditions have problems, those type of things. So as we did some pilot projects, some guys did some pilots last year and the year before, I would say that success was a little variable. There were some absolute roaring successes, and there were some pretty phenomenal failures too. But there's enough success out there for us to figure out how to actually go and capture this market. So main markets that are there, obviously we talked about the quality piece as bullet number 2. The other one is a freight advantage. So you saw where all that wheat was generally located. If we could grow a crop similar in quality, or even an HRS here in Kansas, we could displace some of the wheat that gets railed from a further distance. I will tell you that right now we're going to have a quality grid that is going to be placed on this, but also most of the monetary advantage that you're going to see is going to come from the freight advantage that we have into what would be called the interior mills. Other reasons, I mentioned the quality piece, the rotation possibilities. This year we were kind of exposed a little bit on planting wheat behind soybeans or wheat behind corn because of the elongated fall. This would be something that you could come back in those acres. There's also some discussion in Western Kansas of better water utilization, being able to grow longer season crops and still get a wheat crop in behind it. So those are the main markets we're going for. You might have your own reason in your mind. That's perfectly fine, and we'd be happy to discuss that moving forward, what some of your thought processes are. So how we're going to price the wheat for this program is there's going to be 4 things that we do, and it's really no different than what you would do in traditional grain marketing, with the exception that we're going to be placing the spread on this, and I'll go over that. So we are basing our futures price off of the Kansas City Board of Trade contract. This will be, obviously, if you were to look out in price, you would be pricing on the HRW board. Basis is going to be the Kansas City low side posted basis on a 14% protein. That's as high as Kansas City reports. And we'll go over that trade as well here. I'll bring up some stuff. Then we're going to be pricing against the Kansas City Minneapolis spread. On new crop, we are going to spread the July Kansas City against the September Minneapolis. And the reason for that is the September Mini is actually the new crop contract for Minneapolis wheat. So initially we'll spread July to September. Once the months line up properly and we get past the new crop month for Kansas City, then the spread will be a month-to-month spread. And we're going to price it at 50% of that spread right now. Then there will be a quality grid that is going to be placed on top of that. This is still in defining, but I will show you the example. We're awfully close to where it's going to be. We're just lining it up with the pricing structure with inside the mill. So I'll show you one, and my guess is we're going to be really close to what I'm going to show you. So back to pricing, it's going to be Kansas City Board of Trade futures, Kansas City low side 14 pro basis, and I'll bring those up and I can get you guys the websites to actually find that information, and then the Kansas City Minneapolis spread. So I'm going to bring in an internet page here, if I can, just a second. All right, so as we look at it, middle of our screen here is going to be the Kansas City HRW contract that we're looking at, July 19. If we come across, if you can see my arrow is trading right now at a 534. If we were to come up to our Minneapolis contract in the top right, spring wheat is how it's labeled. We're going to come across this is September 19 at a 595. So our spread between the July 534 of the KC and the SEP 595, we're looking at roughly 61 cents is where we're going to come across as a spread. So we would take the futures, and I'll have another slide for this, but if we were moving it today, we would take the futures price at 534 plus 50% of that spread, which is going to be 30.5 cents. We would add those together, and then we would come here, and this is the USDA reported basis from yesterday. We would sit here and see that our 14 Pro, kind of right in the middle of the screen, 14% protein is going to come across and trade at $1.30 over the March, H being March. So we would add this $1.30 basis to it delivered into the mills in Kansas City. So to come back here to the presentation, see where we end up. So the way that this would trade, I'll bounce back here, is that we're looking at that 534 futures. We're looking at the $1.30 low side 14 Pro Kansas City basis, the Minneapolis spread, and when I built this slide, it was trading at 31.5 this morning. So our net cash price delivered to Kansas City is going to be $6.95.5 based off of that futures price, the posted basis or the reported basis in Kansas City, and the Kansas City Minneapolis spread being split at 50%. Now, on top of that, we are going to be adding a grid similar to the one that I just brought up on your screen right now. Standard for spring wheat is going to be, as we work within these mills, is roughly a 64% absorption rate and around a 15-minute stability. So anything that we can bring into these mills that have as good of absorption rate and better stability is worth more to them. Anything that we bring in that is not as good of quality to them is obviously worth less to them. When we drop down into the bottom left and we see that we have something that is less than 60% absorption, less than 13-minute phrenograph time, that is going to trade based upon only that HRW 14% protein spread there into Kansas City. Still be classified as a spring. You will still capture the carry. You will still have the futures price the same, but it's just going to trade at that HRW, okay? So as we look on this, once again, this grid is not definitive. This is really, really close to where we're gonna be right now. The reason that we're putting a quality grid upon this is because we don't want to end up with the idea that I can just go out and grow a bunch of spring, who cares what it does, blend it off, whatever it is, and just produce bushels on it. HRS is used to produce quality grain. The HRW, some of it is used to produce quality grain. We want to make sure that what we're developing is a product that the mills still want long-term, and they want the relationship with the grower to continue to provide them a quality product. So as we go through the pricing, once again, futures basis is the Kansas City low side on 14 Pros, 50% of the spread, and then we'll apply that grid for quality pieces as well. Now, the next piece of this is going to be the truck freight to get it into the mill. This is going to be variable. I know we have some people in Western Kansas, North Central Kansas, many different locations. I'd be happy to get with you and let you know roughly where trucking is going to be. As a general rule, right now, trucks are running at around $2 on loaded miles. So that's not a bounce rate. If you can find a backhaul, roughly $2 a mile moves a fair amount of grain. Some a little bit lower, some a little bit higher. But we can build those out and get some better spreads. As you go west and your hauls get longer, sometimes those prices will cheapen up a little bit. So this is based upon the Kansas City market and the pricing mechanism that we're going to be looking at. Now, expectations for this program, we have to be able to show them that we can produce a consistent and quality product. So in order to do this program, we're going to enter you guys into the farm strategy program, what we do on traditional HRW. So every truckload of spring wheat that you produce from this program, we will need a sample to come into us. We will do the whole grain analysis on it. We're going to do flour analysis on it in terms of a phrenograph. And then we're actually going to make bread out of this stuff as well. For those of you who are in the current farm strategy network, we will do the exact same thing on this HRS program that we've been doing on some of your HRW work. The reason that we're testing this is so that we can prove that our quality is good, and that we're not just producing a commodity spec out there trying to just make something fit. Okay. There's also going to be state grading that has to be placed on this. It's not difficult. We just take our samples after you send them to us. We build out an aggregate sample of what you have. We will deliver those. We will return those certificates to you and provide those certificates to anybody that you will be selling your grain to. The bake analysis, the flour analysis, and the whole grain analysis also comes back to you. And then we will also be recording your production decisions. So we will be doing an interview in which your production decisions will be recorded. The reason we're doing this is we want to know what makes quality wheat. When we have samples from people and we are able to attach their production decisions to those qualities, we can start to build out a model. So the risk that we addressed in the first slide, saying there's significant risk here, by the time we get through this program, we're hoping to be able to mitigate some of the risk more. And the way that we do that is by recording what actually influenced the crop and why it influenced it. Next thing that we would have an expectation on is, as you put this in the ground and consistently, we want to stay in touch with you, that we would be able to know when you are wanting to move this grain. We know that, most of us are not going to be producing a significant quantity of this. And so there's a decent chance it's going to tie up 10% or 20% of your bin. Nobody wants that going into fall harvest. And so if you're wanting to move it, we need to know so that we can have freight worked out, so that we can have storage pieces worked out, whatever we need to be able to actually execute on that. And so that communication piece is going to be very important for us. So next pieces, insurance and reporting. Obviously, there's no data set for what we're doing, and the RMA does not have a program to back up with traditional crop insurance. You guys are more than welcome to go out and get some over-the-counter cost of production insurance, over-the-counter weather insurance, any of those type of things. We are working with a couple of different groups right now to have these ready for you that we could just roll out as a package, whether you want to use them or you don't want to use them, or you just want to take a flyer on it and just go do it yourself. More power to you. But the insurance will probably be based on cost of production. And then we could put the weather premium, with our biggest fear being the test weight issue. We can do some insurance programs on top of that. FSA reporting, we will have a fact sheet for you when you report this, of how to actually handle this within the FSA. We've had initial conversations with them at this point. We're actually speaking directly with the director of the FSA this coming Friday. To kind of finish figuring these things out. And so we would expect for you to be able to walk in with a piece of paper with instructions up on it and a signature at the bottom that says this is how you should do it. And that way you don't have any major issues as you're reporting those acres. So last thing that I'll speak about is the logistics piece of it. The easiest way to move some of this grain from some of the areas is obviously by truck. We have enough margin built in with the basis spread and some of the carry that's there that we can truck from a little bit further distance. However, with that said, we do have a strategic agreement in place with a group to get us on rail. The purpose of this rail, and here's what I'll tell you on the rail, is we don't know the exact location right now. We don't know the timing of it right now, but we will figure it out actually based upon the feedback that we get and the acres that guys are interested in. So truck is just going to be scheduling. There's multiple agencies. We currently do cross-country trading in the farm strategy office. We manage some of that anyway. And so we're happy to work within that. The rail system is obviously going to have to be incorporating somebody who has a physical asset. And like I said, there's a relationship there. If we look at this program and depending upon the size of it, we think that it could expand. then at that point, we're going to sit here and say, okay, let's actually figure out our pockets of where it should work. And we will bring in an asset or bring in a relationship with an asset to actually execute any rail freight that needs to happen. If we cannot execute that, we will be limiting the program this year. We do not want to end up with bushels that cannot move. And so right now we are limiting the amount of seed that we are willing to bring into the area because we want to make sure it gets out of your hands. If there is a significant appetite for it, we will actually approach some of these strategic relationships that Farm Strategy has and ask them if they're willing to help us execute on this program. If they say yes, then obviously we will begin to work with them, and there will be a different pricing structure that has to be in place because of the elevation of that grain. If there is not willingness on their part or on other people's part, whoever we can get in the area, then we will continue to limit the amount of acres that we can actually bring into this program. So last thing is going to be storage. And this is going to be based upon, are we, when are people wanting to actually move this grain and sell this grain? Obviously, mills grind grain for 12 months a year. Most farmers are selling their wheat in about a 2 to 3 month period of time right after harvest. So with that said, as you look at the program, make sure it's not just put the crop in. We need communication to understand when you're going to be wanting to sell it, when you're going to be wanting it moved out of your storage. All of those typical things with a specialty crop, we need to build an understanding around so that we can actually get this stuff to move properly into the milling market. So with that, I'm going to open up for any questions on some of this, or you can put them in the chat box. And then I'm going to turn it over to Westbred and let them discuss some of the variety selections and those type of things. Okay, I'm going to turn it over, Andrew. Feel free, and I'll mute my mic here.
Thanks, Andrew. So with this class that we've looked at, there's 4 varieties that we have are going to suggest here, that a couple of those in that trial program that Andrew's tried here and positioned in Kansas that worked last year. Couple things on these varieties. These are tried and true varieties up in the northern plains, both in Montana, North and South Dakota. Excellent disease packages on these varieties, both irrigated and dry land. They're going to have different fits on where you're at. But all 4 of these that we're looking at have a quality aspect to them. That's why we're looking at these for this program. Switch to the next slide. So when we're looking at eastern Kansas and Nebraska, probably the top variety for the better or the progressive acre is going to be the WB 9479. Excellent disease package, productive ground, excellent yield potential. This variety is showing some great potential as far as its quality aspects. And because of that, there is going to be some limited availability. When we're looking at these varieties, the spring wheat in the northern plains is going to be limited this year. So if you're interested in this program, we need to get on the ball here pretty quick and start sourcing these varieties, whichever one's going to fit for you. Looking at disease packages on all these that are listed on here, all of them have a rating of a 2 or a 3 on both leaf and stripe rust. Now, those ratings are coming from the northern plains, so they might change a little bit for us as we move them south. But overall, these have quite excellent disease packages. And then every one of these, because of the spring varieties, have some or elevated levels of fusarium head blight tolerance. The other one for eastern Kansas and Nebraska that's broadly adaptable, both dryland and irrigated acres, that does really well up in the North and South Dakota is WB 9590. So this variety is going to move both east and west. So as we move into western Kansas, this is still going to be an option for you. When we switch over to Western Kansas, the tough acre, or the what you'd call more of a Western acre variety, this WB 9719, is going to be the fit for this. This is replacing a variety, WB 9653, that's proven itself over the years. This one's showing better quality standards with better protein and better yield potential. So we're replacing WB 9653 with 9719. 9590 again could both go dryland or irrigated in the Western Plains. And then the last one is going to be irrigated only. This one is a WB 9668. Has excellent mill and bake qualities, excellent protein, excellent yield potential. But we're going to want to stick this variety for now on irrigated only. So along with this, these varieties are also in about 12, Mark can correct me if I'm wrong on this, but about 12 strip trials across Kansas, Nebraska, Colorado, and Wyoming. So we're gonna have a lot better idea of what these varieties are going to do across the broadacre next year. Next slide. Just seeding agronomics and cost. I wanted to share a little bit of this so everybody's kind of got an idea what seed costs are gonna look like for them on a per acre basis. You know, depending on seeding rates and timing, we're going to be looking at that 1.25 to 1.8 million. Realistically, probably going to stick closer to that 1.25 to 1.5 million unless we're going to go in really late with something. You know, seeding is going to begin when we're maintaining about a 34-degree ground temperature, and it's going to, you know, start to rise. So that seed's going to start to germinate at that 34 degrees. So if you think for most of the state and most of this area in that February 15th to March 15th, you know, as we get farther north and farther west, we might bump that back closer to the 1st of April. Seeding depth 1 to 2 inches and adequate moisture, it's not going to be much different than the hard red winter. So average costs on a per bushel basis, you know, coming out of the Dakotas or Montana for this year, by time we figure that trucking rate, like Andrew was talking, I was kind of using those same numbers, and we're you know, roughly shooting for 110 pounds per acre. Depending on the variety, we're going to be looking at that $23 to $30 seed cost per acre, depending on your location. So that's going to be that $12 a bushel seed plus, you know, two and a quarter in trucking to get that down here. Next slide, please. Variety logistics. So what we're looking at on 9719 for those dry land acres is going to be coming out of either Brookings, South Dakota, or Billings, Montana. So, you know, I just kind of figured into that central Kansas, it's 900 to 1,000 miles. WB 9590, right now the closest source is going to be that Billings, Montana area. Same with the WB 9668. The 9479, there's a pretty good chance we're limited to very little or no seed left. Like I was saying, with the spring wheat in the northern plains, they're running out of certified seed already with most of those locations. So it's going to be very limited, but we're going to need to know pretty quick so we can try to source that. And any questions on the varieties, you guys are more than willing to email or call Mark or I, and we'll do everything we can to help you source those varieties.
So I'm going to jump here as well on the agronomics of this piece. So guys, we're wanting a higher quality wheat. What I'm going to tell you is you don't want to short it for nitrogen, but yet we don't know the full yield potential on everybody's acre, and so we're going to have to lean pretty hard on you. That if you're producing a 10% HRW, we probably want to up some of the nitrogen that we're doing. Now, from a quality standpoint, I'm also going to tell you that sulfur is going to be very, very important for you moving forward. The sulfur in an 8 to 1 or 10 to 1 nitrogen ratio. So if you're putting down 10 pounds of nitrogen, put down 1 pound of sulfur. Sulfur is very, very critical to wheat quality. Now, sometimes it is not as dependent. Sometimes protein, the gross protein of your bushel, will be inversely linked to the amount or to the sulfur. So if you apply sulfur, you might get a lower protein, but you're going to get a much higher quality wheat in what we're working on. Within farm strategy, I'll also say that we're seeing some benefits from chloride applied late on the plant. And I would be happy to share any of that data with you guys as we move forward. So with that said, we're not going to sit here and say you have to execute a very specific agronomic package. We want to see some variability in our agronomics because that helps our data set actually to hone in on what makes quality. But we want you guys to be thinking about quality. If we produce a bunch of HRS that we have to move that's just comparable to an HRW, then we really don't have much of an advantage. We lose 100% of that freight advantage because we're just making HRW with fancy varieties. So think about this in terms of the quality we need to produce. It might need a little bit more input to it. We would hope that the economics of that basis spread would be able to overcome some of the extra cost that you're going to have to incur to make this happen. So no defined program you have to execute on, but a very clear idea that we need to be doing a good job with these bushels.
Hey Andrew, this is Mark.
Yep.
So for any growers that are managing that have high management hard red winter, really the hard red spring management program is not a lot different. The only maybe the one key piece would be, as opposed to 2 to 2.2 pounds of nitrogen per bushel, those growers in the Dakotas are more in that 2.2 to 2.5 pounds nitrogen per bushel with the accompanying sulfur ratio that you mentioned. So probably the first week of January, so I've started on just kind of a basic management prescription or tech sheet, so to speak, and I'll get that finished up when I get back from vacation and get that sent out. And if anybody, I guess I'd be curious if there's any questions regarding management, please ask or send those questions to Andrew or myself, either Andrew or myself, and I'll make sure I address any of those questions on that management guide. That's all I have.
Steps forward for what we're going to do is that we need to have a base understanding as we get ready to launch this program. We need to have a base understanding of who the growers are that are interested in doing this. Like I said, we have a trial network already going, but we need to know who's interested in doing a little bit of grow out or a little bit more than just a strip trial. And that's for two purposes. One is for us to figure out the seed placement and make sure that we can get that seed down here in a timely fashion. The other thing is going to be for us to be able to build out the economic package for you so that we can better understand, if it makes sense economically in this program to grow for you. So as you've listened to this, if you have some interest in it, I would encourage you'll have an email that is going to be following this presentation for anybody who listed out an email. For anybody who didn't, I get your phone numbers here as well that I'll be able to text you a message and let me know your interest. That way I can help build out the economic model for your location, what we think freight's going to run you, those type of things. And then also if we have significant clusters of acres available to us, we will actually approach to see what we can get done on a rail as a group. So those are the things we need moving forward is, your expressed interest and roughly how much you're willing to put out with this. And then also your location and those type of things so we can build the economics. We can get the varieties started to get those ordered and roughly in place. And then we'll probably follow up, my guess is, with another presentation first or second week of January, similar to this, in which we'll go over some of those economics. We'll go over some of Mark's production data and any other questions that you guys might raise. There's a couple of questions that I'm going to read out to the group here. Potential delivery points in Colorado. So last year we had some stuff that was out in that area. I will say that we will probably discuss Ardent Mills bouncing down into Denver. We also have truck lanes that run that lane actually back into the Omaha area. And last year we placed a fair amount of this HRS back into Omaha, economically viable from that area. Harvest time. Most of the guys last year who were doing this finished harvesting their hard red winter wheat, and within a week they were harvesting their hard red spring and it was ripe. So we're looking at probably, you know, if you start July 5th or start June 15th harvest, you're maybe looking at a July 1 it'll be ready. If you're a little bit later in the year, I think accordingly, you know, 1 week following the finish of your HRW is what everybody was seeing. Any other questions or thoughts? Okay, with that, this presentation will be available. We'll be able to send you a link, give us a little bit of time to get it posted online. I will say my email is andrewh@farmstrategy.net. That's andrewh@farmstrategy.net. Phone number is 620-562-0168. Once again, 620-562-0168. If you want any of that information, or if you just want to talk about this a little bit more, feel free to shoot me an email, a text, or a phone call, and we will go from there. Now, yields in 2018 in the north central. Sorry, another question was what were the yields in 18 in those locations? In the north central Kansas area last year, we had yields that were running the same. I won't give away people's secrets here, but they were with almost no variability comparable to their HRW. They were of good test weight, and we took everything into a mill. With them, the mill was very, very satisfied. Northwest Kansas, southeast Nebraska, that area, we were having yields that were comparable to slightly less than the HRW that they planted. We were able to once again take that into a mill. Good test weight on that program. That they had a little bit of issue with weather in terms of rain on the crop out there, but comparable with HRW in both locations. Now, I will say that K-State has a trial that they put out. I think Romulo put a trial out in Reno County, I do believe, and that was the failure. I mean, it just wasn't good data down there in that area. Our assumption is that this program is going to have to be located in the northern tier of Kansas, up into Nebraska, possibly, you know, northeast Colorado. Or it's going to have to be located on irrigation where we can combat a little bit of some of that heat and dryness. But that's where the trial network is going to be. And that trial network is going to have some stuff in Wichita or around the Sedgwick County area, Rice County, Ellsworth County in the center of the state. North central Kansas has some, Northwest has some, kind of southwest, kind of west central, I guess, probably on that dividing line is going to have some. Going to be out into Colorado with some of it as well, in Wyoming. So Mark can get a little bit more into that maybe on the next presentation.
Yeah, and I think, you know, in addition to that, we do have, so basically we have 4 hard red springs, the ones that Andrew discussed, at every location. And then in some locations, we have 4 hard white springs that we're looking at as well. So just to be kind of a litmus test of, okay, let's test all of these varieties in a single location and really just see, get a better understanding of geographically where they fit and management style, like you talked about, Andrew, which varieties may respond better under different management situations. So we'll have a really good look after this year of, so we've got trials from pretty much Topeka, Kansas, all the way out to Denver, within that I-70, I-80 corridor, and a few south of I-70. So we'll have a really, really good look after this year of what what we have moving forward.
Any other questions that can pop up here? Oh, there's how can we contact you? If you signed up with email, we will be sending out an email following this presentation that should have our email address and all that contact information for you. If not, your phone number that you dialed in with, I should have that, and I'll make sure and text everybody who dialed in on a phone number. If you don't want to respond, just make sure and kindly let me know that. All right. With that said, I thank you guys for coming, and would ask that if you have any questions, you reach out to us, and we'll make sure and get something set up here real shortly. Thanks, guys.